Morning, Wall Street winners. It is Tuesday, June the 4th, and if we take a look at the futures right now at 8:48 in the morning Eastern Time, everything is in the red. The Dow is off 115 points or 0.3%, the S&P 500 off 0.36, and the NASDAQ off 0.31. So it looks like we're going to start the day in the red, and that may be because of some news overseas that are dragging down overseas markets. We saw some election results out of South Africa. We've seen some election results out of Mexico, as well as out of India, and maybe not moving in the direction that the markets were hoping for. So it could be throwing off foreign markets, and that could be kind of pushing its way through to North American markets. Really hard to say. We've had a pretty solid run and growth trajectory in the markets thus far. So maybe it's just a bit of a pullback today, going into some news towards the end of the week around just additional data points related to inflation. So we're going to get some jobs numbers. We're going to get some salary numbers this week, and or salary earnings reports, not company earnings, but individual earnings, and see whether we're in line with expectations. So if we take a look at what's happening today is we have CrowdStrike and HP reporting after market close. We have crude way down this morning. So crude is down $1.12 at $73 a barrel. This is definitely going in the opposite direction to where, as investors, we want it to go. As consumers, we're probably happy about this because it means that things should be cheaper at the pump as we move forward. But we'll have to see how far that ends up going down. I think we're getting close to a bottom in crude, and I think it's that crude drop today is going to pull overall crude prices down in the oil companies and refiners that we follow. And if that's the case, I think long-term being maybe 1 to 3 months, I think we're looking at a pretty positive outcome. Even right now, most of the oil stocks are kind of holding their own. There was one exception yesterday. CVE, Cenovus Energy, dropped $1.72, $1.72, which is a huge percentage drop. If we go into the percentage change, to see a company like that drop 6% in a day is fairly strange. So that might be an interesting acquisition today, but probably watch it at the open, see if it looks like it's going to move lower. I would expect it will move lower today, but it should hit a bottom by the end of this week, I would expect. And we should see some of the other crude stocks move lower as well. With crude, you've got the transport stocks there, kind of moving in a range. I was in and out of some JBHT over the last week or so, getting in around 56 and out around 58, 59. So if it comes back down to 56 to 58, JB Hunt, I'd probably look at picking up some more of that. Steadily on the increase is Humana. Now it has taken a few big hits with earnings this year, but it should start to slowly climb back. It's kind of climbing slowly and quietly behind the scenes, kind of like the financial stocks have been. Lulu's got results this week, so that's one to watch. It was up at 311. It came down to 306. It looks like it's off today. I'd say if you think that they're going to have good results, in around the 300, 304 mark is probably a good entry point there. Dollar Tree announces this week as well. I think it's today, in fact, and I'd expect some positive things out of Dollar Tree. I know Dollar General is what we have in the list here, but there are other competitors in that space with similar names. If we scroll down into tech, CrowdStrike, I mentioned, not one that we follow here, but one that I do like. It announces today. The other cybersecurity stocks, particularly PanW and Net, have not had super earnings this quarter, so could expect a miss on CrowdStrike, although they could be the anomaly and they could come out ahead. I would steer clear of that ahead of earnings earnings and just wait for a buying opportunity if it dips. If it does pop, I don't think it's going to pop a huge amount, and it'll likely come back in line with the rest of the tech market and that sector and the index as they tend to do. And then we look at Intel is one that we don't follow, not a huge Intel lover at this time, but they are pushing back against comments from the CEO of NVIDIA, and they're up pre-market about 1%. NVIDIA coming out, the CEO, and saying that, the days of Intel and the chips to support AI are behind us, and Intel kind of fighting back on that messaging, and that's probably the same for AMD to fight back on that messaging as well. If we move down through the list, one of the ones we were into yesterday and wasn't into yesterday, but saw great results in that we do like is Meta. What we were into yesterday that had some interesting movements was Google, and it did close above 174. It's off a little bit, I think, because it's kind of been a laggard to the rest of the tech and moving in a different direction. We may see a pop in that even if the NASDAQ is down. It may go in the opposite direction. You can see that Adobe has been climbing back steadily. It didn't have a great day yesterday, but it has been trying to get back up into the 450 range. And it does have results coming in mid-June. So that is one that has not yet announced their Q2 results. SoFi below 7 at 677 looks like a fabulous opportunity to get into there. And then we have some of our others. So MTB dropping down as a regional bank. The other one there, Bank of California, down at 1345. Could be an interesting longer-term type buy and hold acquisition. Morgan Stanley is back in the high 90s, and Goldman is in the 454s. I think there could be a little bit more pullback here. We are expecting on June 5th, which is tomorrow, that the Bank of Canada will announce a rate cut, and that is likely going to hurt the Canadian dollar. So if you do have any holdings in Canadian dollars that also trade on the US exchange, like TD as an example, or really any of the Canadian banks, maybe an opportunity to move those into a US account. You don't have to sell the stock, just have your brokerage move that holding, the number of shares you hold, over to the US, and you may get a little bit of FX appreciation on that when you do go to sell that. Plus, you'll be in US dollars, so you can then buy and trade some of the US stocks that we have. And with the US dollar really being the global benchmark, that's something that I would certainly encourage more Canadians to do, is try to de-lever the amount they have in Canadian companies and get some exposure in U.S. companies and in the U.S. market. So you're trading in U.S. currency, so that when you travel internationally, you can pull those dollars out and not have to incur a foreign exchange fee when trading money over the counter. So that's where we are today. Good luck with your trades. I hope you're liking these videos. Please hit the like and subscribe button. Leave me a comment if there's something you'd like me to go over, and mitigate your risk in your trades today.